I'm Judy Shaw for NYSE Floor Talk. Joining me today is Dr. Joel Shulman. He is founder and managing director of ERShares. Hi, Joel. It's great to see you again.
Great to see you again, Judy. Thanks for having me back.
Yeah, great. Thanks for joining me. Now, a quick note to our viewers. This interview is for informational purposes only. The NYSE doesn't recommend any investments or investment strategies. Now, Joel, tell me about ERShares. What's your investment strategy?
Well, we invest in publicly traded entrepreneurial companies. And by this, we mean it's more than just Amazon or Netflix. There's some high profile companies that people kind of nod their heads, like Tesla or whatever. They say those are entrepreneurial companies. But we've got hundreds of companies around the world, large cap, small cap, throughout Asia, Europe, Latin America, North America, of course. And these publicly traded entrepreneurial companies, they're innovators, they're disruptors, and they pivot very well during crises, as we saw in 2020. And that's our strategy. It's proprietary, and we've got an entrepreneurial factor that goes back 15 to 20 years of solid, academically tested evidence to show that we have an edge when it comes to investing in publicly traded companies.
Okay. Now, Joel, tell me about your proprietary methodology. What is the entrepreneur factor?
Well, the entrepreneur factor was created about 15 years ago. I wrote a book with the former president of Chrysler Daimler, Tom Stolkamp, and while I was studying at Harvard. I'm also a professor at Babson College. We developed this academic model because there were no single trait that would say, what does it mean to be an entrepreneur? So what we did is we comprised 15 traits, including management criteria, the way they grow, sector, style, all these traits we built into our model. Now, when people compare our performance over benchmark performance, what they'll see is an excess risk-adjusted return. And normally, the excess risk-adjusted return, theoretically should be zero, but if you have it, it's normally associated with other well-known factors like momentum, or the sector, whether it's IT or healthcare, or the country risk, or the style, is it growth or value. Normally, the excess return is associated with some factor. What we did is we incorporated our model and we compared it to all the other factors that exist in well-known databases like Bloomberg. So there are over 30 of these. And what we discovered is that we have an excess return over our benchmark. And after adjusting for all the other factors that came up about this, with all the other factors, not only the biggest factor, but it was multiples. Our entrepreneur factor was multiples of all the others combined over our database, over our time period. And so this entrepreneur factor shows that, traditionally, these types of companies, entrepreneurial companies, create extra return associated with the management criteria that we incorporate into our model.
Mm-hmm. Okay. Now it's a new year, 2021. What's your outlook on the market, particularly the entrepreneurial sector?
Well, in 2020, we had an unusual year, obviously, with COVID. And what we saw in March is that the performance for the market was well down at the lowest parts of March. It's down 26%. Our entrepreneurial benchmark, our entrepreneurial cohort, was down only about 19%. So it was down less. The market was here, and our benchmark was around here. Then we ended the year over 50%, and the benchmarks were either 33% for the Russell 1000 growth, or the S&P was 15 to 20%. So we had lower risk and higher return than the benchmark. And our beta, for those members of your audience who like to look at beta, it was 0.85, so it's less than 1.0. So it was lower risk, higher return. And so we had excess risk adjusted return. What this demonstrates is the ability for entrepreneurs to pivot. So as companies like Amazon and Moderna and BioNTech and Wayfair and Netflix and so forth and so on. And when you think about BioNTech or Moderna, these were small entrepreneurial companies. Now, in the case of BioNTech, they partner with Pfizer, a big well-known company. But there are many other well-known pharmaceutical companies like Johnson & Johnson and Roche that didn't come out with a product to help with the vaccine. It was a small entrepreneurial company. And this shows the ability of entrepreneurial companies to pivot. They did it last year. They're going to continue to do it this year, and they'll continue to do it next year and the years beyond. These entrepreneurs are disruptors. They pivot. They innovate, and they've been doing this, going back, to the beginning of time. So in this country, we have Rockefeller and Carnegie and Jobs and Gates and now Bezos and Musk, Elon Musk. So we've got these entrepreneurs who consistently are pivoting, they're innovating, and they're disrupting. We see this continuing through 2021. We particularly like healthcare right now, small cap healthcare in this country. We also like international for other reasons, but we're seeing extraordinary opportunity in the genomics area. And for those members of your audience who focus on certain groups of investors and so forth and managers, they're actually our best stocks right now. 5 of them are led by female entrepreneurs. And so we're creating a separate portfolio in this area. Entrepreneurs are not defined by a single group. So they're around the world, different market cap sizes and so forth. And we're very proud of this. And we're convinced that healthcare and tech will continue for 2021 and be very strong. Yesterday, when we think about early January, the first trading day of the year was a little off. The second day was strong. We think that's going to continue, throughout 2021. Of course, there will be hiccups along the way. They always are. But we think at the end of the year, it's going to be similar to 2021, where the entrepreneurial companies will dominate, and we think particularly small cap and small cap healthcare.
All right. Now, you talked about all the innovation with these entrepreneurs in 2020. 2020 is really a year of the innovative entrepreneur. Tell me more about that.
Well, in 2020, we saw, again, these companies like Moderna and Netflix and Wayfair, and all these companies were able to pivot very quickly. Zoom Video is another great example. When you think about these companies, oftentimes the entrepreneurs come from a larger company. They leave and they create a better company. So in the case of Zoom Video, the entrepreneur previously worked at WebEx. And many people thought when Zoom Video was created, how are they going to compete with WebEx? And now we know Zoom Video was an extraordinary growth opportunity in 2020. We saw time and again these entrepreneurial companies pivot, and they maneuvered, and they were able to figure out ways, and they disrupted the market. And so, for example, even when you think about the travel leisure industry, that was decimated by the crisis we had in 2020, we saw it near the end of the year. Airbnb, same industry, that did extraordinarily well, with their IPO. We saw DoorDash in an industry where restaurants, again, had a very difficult time. Many of them went out of business. Retail went out of business, and restaurants in particular were hard hit. DoorDash, a group of entrepreneurs, a bunch of college students 5-6 years ago, are now billionaires. And so we're seeing this time and again, across many different areas where entrepreneurs were able to pivot. They were able to disrupt the market, and they took market share away from traditional old style industrial companies. And we've got to recognize that things have changed quite a bit in the last 20-30 years. When you think about the indices that we had 20-30 years ago, companies like Exxon were the heaviest weight in the Dow. It's no longer there. General Electric was the heaviest weight in the Dow. It's no longer there. Boeing last year was the strongest weight in the Dow. It's now way down in terms of impact. And so we are seeing tradition. And by the way, from a jobs perspective, we see traditional companies lose jobs. And when you look at the Fortune 500, most of the jobs being created are among a handful of entrepreneurial companies. The job growth is markedly different between the entrepreneurial companies in the S&P 500 and the S&P traditional companies, where there's extraordinary job growth. In fact, the job growth for 20-30 companies more than exceeds the job growth of the other remaining 470, 480 companies. And when we think about 2020, and you look at the Russell 1000, it had about a 20% return for the Russell 1000 benchmark. About 13%, or almost 2/3 of the return, came from only 10 companies. And when you look at the Russell 1000, there were 20 companies, the top 20 companies from performance were all entrepreneurial companies, right? All entrepreneurial companies, top 20, among the Russell 1000. So 2020 was the year of the entrepreneur from an investment perspective. We see this continuing 2021. We're not saying that all the top companies, again, are going to be entrepreneurial. We're pretty confident that the top companies, the majority, if not most or all of them, will be entrepreneurial companies. It happened last year. We see it happening again this year.
Joel, thank you so much for joining me on NYSE Floor Talk.
Yeah, thank you very much, Judy. Great seeing you again.